Ross, from a cross-border capital markets standpoint, do you see more international capital flowing into Australia, and if so, from where?
Yeah, I think that's a good question. In 2020, I think we're really surprised by the amount of international capital that came into our market. In a year where domestic and international borders were closed for a lot of it, you would probably expect that the market would be more subdued from foreign entrants. However, what we did see is more of the large-scale transactions and prime deals coming from major offshore groups. So in Sydney, we had Grosvenor Place transact in a landmark deal to the China Investment Corporation. Down in Melbourne, the Singapore government bought Rialto Tower, and German pension fund Decker purchased 452 Flinders Street in Melbourne. So we saw these major transactions happening, dominated by offshore parties. And on the industrial sector, we even saw a major transaction with the Audi portfolio being purchased by Allianz. So coming into 2021, I think we're going to see that theme continue. From the domestic purchases, the REIT sector has currently been trading off its highs, and that's going to make it probably more challenging for some to raise capital and drive investment through 2021. I think foreigners are going to see the relative attractiveness of our market and really be dominant in 2021.
We haven't touched on the vaccine rollout yet. How do you think this will affect the market in 2021?
The vaccine rollout's really interesting. What we're seeing at the moment is a lot of a confidence element in our market. So in November, Pfizer announced a potential vaccine, and we saw office and retail REITs really bounce in their share prices off the back of that news. And then again in December, when we saw lockdowns come back into parts of New South Wales, we saw share prices come off quite a bit again. So there's a lot of confidence. The market needs confidence to come into the sector, and these vaccine rollouts and the developments are very important to that. So at the moment, we're on target for full vaccination by the end of 2021. I think that's going to put a lot of confidence into the markets.
And this rollout of the vaccine does seem like a huge logistics puzzle to get it around the country. What will that mean for industrial, logistics and the healthcare sectors?
What we think will happen there is the logistics task is going to be challenging. There's two vaccines out there. One has to be stored between 2 to 8 degrees Celsius and the other one at negative 70 degrees. The vaccine that's at 2 to 8 degrees Celsius can be much more managed within the existing supply chain networks that exist in the industrial sector. The negative 70 degrees will be much more challenging, and that's going to be distributed through containers packed with dry ice, and getting into remote destinations is going to be quite challenging. However, this is really a one-off event in the market. So with the national government hoping to have full vaccination of the population by 2021, it shouldn't create a sustained long-term demand for industrial. There will be a challenge as these operators work out how to distribute it around the country.
And who will be distributing it?
So that's Linfox and DHL have signed up the national contracts with the Department of Health to do that. And that's going to be the challenge of those groups to get that around the country during this calendar year. Into the healthcare sector, I think what we have seen is parts of the healthcare sector have been more subdued this year because of COVID, insofar as elective surgeries being postponed and some potential challenges in that sector as a result of that. And as this vaccine rolls out, it should give people much more confidence to return to elective surgeries and drive that part of the market.
During the 2020 calendar year, we saw some really big equity raises across all sectors, including real estate. Now that the market is stabilizing, do you expect the volume to decrease this year?
Well, surprisingly, we actually saw less issuance in the real estate sector in 2020 versus 2019. It was down about 13.5% year on year. So within the equity capital markets, the markets raised $6.3 billion for real estate. I think what's likely to prevail into 2021 is some potential M&A opportunities. So what we're seeing is a large amount of REITs now trading at discounts to their net tangible asset backing. And as I said, our market's going to look very attractive to offshore purchasers in a context where we've got very low virus cases. They've seen the resilience of the Australian economy and the Australian real estate sector, and that could present some M&A opportunities more so than possible equity raisings through 2021.
And Ross, what about alternative debt providers? We've seen a lot come into the market over the last 5 years as the banks have retreated in some sectors. Do you think this trend will continue?
Yeah, I think the demand for debt is going to continue. As you said, there's a very low cash rate out there at the moment at 0.1%. Borrowing costs are at historic lows. I think what we are going to see is a number of groups that will be successful in the market this year probably look to step up the leverage scale. As a market, we run a mindset of very conservative leverage across our REIT sector. The sector average is sub 25% for gearing, And in other advanced economies, you're seeing people very comfortable with leveraging into transactions at 60+%. Now, I don't see that playing out here, but I do see the demand from offshore capital driving higher leverage, and that'll be a level that the banks aren't used to, and that'll really drive demand for alternative providers into the sector.